Muthuraman of Tata Steel joins in after quite a few weeks and months. Mr. Muthuraman, morning. Good to see you again. The big relief that we sense from a lot of your investors is that the market is opening up, liquidity is available once again, and therefore maybe the fears of balance sheet stress may be an issue of the past. Many of your large cap peer companies have gone on to raise capital already in the last 1 month. Do you sense that your access to capital could also be easing up?
Yeah, it is so. And there is also, in India at least, there is a renewed confidence on the political system. And we have had the recent elections and Congress getting back with a vastly improved majority, vastly improved position rather. So there is an overall better, I would say, confidence level than what it was a few weeks ago.
Do you sense that all of this will translate into higher demand for on the ground materially because of higher infrastructure spending, etc., or is this largely sentiment that you're referring to?
Just now I think it is more of a sentiment rather than actual demand, but let me describe to you the Indian position in the context of the global position. Just a few weeks ago, early April, the World Steel Association met in London. All of us, all the directors of the World Steel Association, representing steel industry across the world. And we came to the conclusion that the 2009 demand for steel would be down compared to 2008 by about 15%. And if I see the actual numbers this year, between January and April, in the last 4 months, actually the world production and consumption is down by about 23% around the world. Of course, India is the only, shall we say, shining star in that, where I see that in the month of April on April, India has done well. Even Jan, February, March, April, the last 4 months, India has not done too badly compared to the rest of the world. And I do see signs of revival as far as India is concerned. But I don't see too much of sign of revival as far as the global steel production and consumption is concerned. It is still down by about 23%. It could improve, and there are some faint signs that it would improve. But I see a situation where US steel production and consumption is down by almost about nearly 50%. In EU it is down by, I would say, almost 40 or 45%. And in many parts of the world, the steel consumption, steel demand is indeed down. But India is doing rather well due to a number of measures. One is we are not exposed to the export economy too much. Indian infrastructure spending is still reasonably on track. There is more liquidity in the market now in the last few weeks. So there are some good signs for India.
Mr. Muthuraman, morning. Some of the flashes that came out from the World Steel Association also indicated that prices globally could fall by as much as 15% in this year. Would you say that is a likely outcome in terms of prices, and where do Indian prices stand in that context?
You see, the world prices have already fallen. In fact, the largest fall took place in the last quarter of the year 2008. I don't see it falling any further. In fact, the steel prices today are roughly at about 50% of the peak of 2008. I don't see steel prices falling any further. To my mind, it has already touched the bottom. But what I do expect is, the raw material prices are also falling down. The iron ore prices have fallen down by about 40% from its peak of 2008. The coal prices are down to something like maybe $110 to $120 compared to $300, which is the peak in 2008. So once the stock of raw materials get exhausted, even though the steel prices would not, I don't expect it to change too much during the course of this year, but I do expect the steel industry margins to improve once the current inventory of raw materials are consumed. But this would take about probably 3 to 4 months more.
Some domestic manufacturers have indicated, Mr. Muthuraman, that they don't see prices falling below $400 to a ton. What would your floor for prices be, and even range be for this year then?
You see, the current prices in India are in the range of, say, hot rolled coil prices are in the range of $450 to $500. I do expect, there is of course a little bit of pressure. The Indian prices, because of the fact that the Indian demand is in a better situation than in the rest of the world, the Indian prices are marginally higher than in most parts of the world. And therefore, there is going to be a little bit of pressure in India from imported material. There could be some dumping takes place. We need to take care of that. And if we ensure that there is no dumping at unusually low prices, which could affect the local industry, I expect the prices to remain at the level of about $450 or so.
Is there a legitimate case, Mr. Muthuraman, for an anti-dumping duty of some sorts? If that is not given by the government, do you think Indian prices can still continue to trade at a premium to global steel prices?
You see, in India we have the issues of port logistics, difficulty of handling too much of steel or any other materials in the Indian ports. There are logistic problems. There are internal transport costs which are high. So I do expect the Indian price, and the Indian demand is, I would say, the pull from demand is better than in the rest of the world. So I do expect the Indian prices to be a little bit higher than the international prices. But we need to ensure that dumping does not take place. We need to ensure that we have good mechanisms to protect the Indian industry from unusually low price imports, and we need to have good anti-dumping measures to prevent that from happening.
What about Chorus, Mr. Muthuraman? Because Tata Steel is no longer a domestic company. It's got a very large global exposure. Do you expect Chorus to then have a very ordinary 2009? Because last quarter Chorus numbers were much above analyst expectations. Do you think the weakness in steel prices will catch up with Chorus's numbers?
You see, all steel companies in countries like the United States, in Europe, are suffering much more than companies in India, because the US steel production, for example, is down by almost 48%. The EU production and demand is down by about 44-45%. And it is for everybody in Europe. In Chorus, what we have done is, I believe that we have taken some actions early in the day. Last year, towards October, November, we started a program called the Weathering the Storm. We toned down the production in line with the demand. We set in a number of initiatives for cost reduction. The integration benefits are slowly flowing in. So we have taken a large number of measures in Chorus. But in spite of the large number of measures in Chorus, we do expect a big challenge, just like any other steel company in Europe is facing today.
The equity market was quite taken aback when a couple of weeks back a domestic steel manufacturer said that they would see volume growth of more than 70% in this financial year, Mr. Muthuraman. I understand it's not an apple-to-apple comparison because you have Chorus as well, but are you feeling confident of setting out that kind of volume growth target, 70% plus?
I have not heard the figure of 70% anywhere, but I do expect the Indian steel demand to grow even in this year by about anywhere from 6 to 7% or so. And let me tell you, Tata Steel's Indian operations, we are planning to sell about 25% more this year as compared to last year. Our new capacity in long products have come on stream in the second half of last year, and we have very good systems in the marketplace in terms of our customer contacts, our distribution policies, our channel management, and so on. So while the Indian steel demand, I expect it to go up by about 6 to 7% this year, I expect Tata Steel's Indian operations to sell about 25% more than what we did last year.
That was JSW Steel, Mr. Muthuraman, which gave that huge sales guidance. That was not from the industry as such. But you've got a £3 billion loan on the Chorus acquisition. Can you tell us whether Tata Steel this year, now that the market has opened up, is planning to restructure its debt in any form, infuse any kind of equity capital or quasi-equity instruments? Is that in the offing at all?
No, we are planning a number of measures. It's not the right time to divulge our plans just now. But our cash position is quite okay. And in fact, we have, as you may have seen, we have repaid some part of the debt. In fact, we have prepaid the debt which is on the Chorus balance sheet. And we are doing everything possible, both in Chorus as well as in Indian operations, to improve our internal generations.
Is there a target, sir, that you set out for FY10 in terms of how much you want the company's debt to be scaled down to?
Yeah, of course, we have some targets.
What would those targets look like, Mr. Muthuraman?
No, I would not like to discuss the target.